Have you thought about becoming financially free through real estate investing, but don't have the time or knowledge to get started? Welcome to the Real Estate Cowboys podcast. Each week, we discuss passive income investment opportunities in the red-hot Texas market. John Larson and the Real Estate Cowboys will show you how to leverage their team to build wealth in real estate through passive investment opportunities. And now, here's John.
Welcome. John Larson here with the Real Estate Cowboys and another episode coming your way. Today, we're going to be talking about property management and the importance of a good property manager to make sure that your single-family residential rental properties are performing the way that they should. Property management is a super important part of the whole landlord single-family rental model. Without a good property manager, your property can easily fail. So I want to talk today a little bit about the importance of property management, how to find a good property manager, how to find the right property manager to manage your specific asset class, or is it a multifamily property, is it a single family property? There's a lot of different things that you're going to want to consider when vetting out a property management company to manage your asset. Especially if you don't live in the market where you own your properties, right? So many Californians look to invest elsewhere outside of California. One, because California is just not a very landlord-friendly state, so it's very difficult to manage properties in California. But two, the rising prices there in California just doesn't make sense necessarily to purchase a single-family rental property. So if you're going to invest in, let's say, Texas or Michigan or Florida, in a property that's all the way across the country, you're going to want to make sure that the property manager that you're using is someone that you can trust, somebody that's reputable, somebody that has a good name in the industry, and somebody that is going to manage your property as if it was their own, and really their goals are in line with yours. Obviously, you want a property manager that's going to have the same common goals, keeping the property occupied, keeping the tenant happy so the tenant stays in the property, but also being fair. I've seen some property managers that go a little overboard. They care more for the tenant than they do the owner, and so you find them fixing maintenance issues time and time again. Well, that doesn't really help out the owner in that situation because the owner has maintenance charges on their bill every month. So a good property manager is going to go in and identify what's actually going wrong with the property. It's to limit maintenance requests, right? We don't want to have a lot of high cost charges on your statement each month. And one of the ways that you can see these high cost charges is through maintenance, repeated maintenance. And so you want to find a property manager, like I said, that has your goals in line. They want your property to perform like it was their own. And so we're going to go through a few things today. We're also going to talk to Scotty Mitchell of American Real PM, headquartered in Dallas, Texas. It's actually my management company, a sister company of ours, American Real Estate Investments, and Real Estate Cowboys approved property manager here in the DFW market. He manages properties in Dallas-Fort Worth, down in Houston, and then in Missouri and St. Louis and Kansas City. And so American Real PM has been around for almost 2 years now and already manages almost 500 properties nationwide. So they're growing very quickly. And I think you'll really enjoy what Scotty has to say. He comes with a wealth of knowledge. He's a property manager in New York City as well. So he has a lot of knowledge in terms of what to look for in a good property manager. And he's also an investor himself. So he runs American Real PM as if, he was his own client, and so he makes sure that things are running in a very investor-friendly atmosphere, and that's one thing that I really like about the philosophy of American Real PM. It's definitely investor-friendly, and everything that they do at American Real PM revolves around the performance of the property. So the owners are seeing a solid portfolio and solid returns on their portfolio for years to come. And so let's get into it real quick. So I've actually come up with a few different things regarding property management and things to look out for when investing in single-family residential properties and when vetting out a property management company. And so, like I said, I believe property management is the greatest factor in keeping an investment performing at its highest potential. As an investor, your property manager should be your eyes and ears on the ground. A good property manager watches over your investment like it's their own, like I said. It's not uncommon for a knowledgeable investor to interview 2 or 3 management companies before making a final decision on who should be responsible for managing their asset. So, just like you're going to interview someone to work at your company, it's the same thing. This is a business that we're running here. Single-family rentals, it is a business. And you start to get to 2, 3, 4, 5, 10 or more properties, that's a pretty substantial business. And you want to make sure you're hiring the right team to watch after your investments. And so I don't think it's uncommon to manage 2 to 3 different companies or to interview 2 to 3 different companies before making a final decision on who should manage the assets. And I've seen plenty of investments fail due to poor management. And really that goes back to, I'll tell you, my own experience in managing properties in Detroit, C and D class properties. They're very, very difficult to manage. So it's very difficult to find a good property manager that are willing to manage those type of homes, because you got to think about it. Some of these areas where these properties are located, they're dangerous areas. And a lot of times I've found in my career that, a C-class property generally is managed by a C-class property management company. And I've done C-class assets in many different markets across America, not only Detroit, but St. Louis, Kansas City, Indianapolis. And I've seen some pretty good property managers, but then I've seen some really, really bad ones as well who they don't have the proper infrastructure in place to manage hundreds or thousands of homes. And it gets a lot more tedious to manage a lower class asset I've found in my career. High B to A class investments, properties that are priced closer to the median value in any market tend to be a lot easier to manage. It's just better neighborhoods, little to no crime in these neighborhoods, a lot more passive even for the property manager to manage because you're not really chasing down rents. You have tenants that have salary positions that are paying rents on time and consistently. And so you're not running around chasing down rents. You're not filing for eviction. I've noticed that maintenance requests are a lot less frequent with higher priced investment properties or properties that are positioned in better neighborhoods that attract better tenants. I've seen it across the board. So, when you're dealing with A-class investments, high B investments, you're usually dealing with a higher quality management company, a more professional management company, a company that does have the infrastructure in place, different departments for things, utility turn-ons and shut-offs, rent collection. Many professional property management companies, you'll also see they have a team dedicated to troubleshoot maintenance calls. A lot of maintenance calls that are called on properties, they're really frivolous. They're really a simple fix. There's really not even a need to send somebody out to the property a lot of times. Like if a thermostat's not working, well, maybe the batteries are dead, or maybe just reset it. So there's ways that you can troubleshoot simple maintenance fixes over the phone to where you're not sending people out to the property and the landlord's not being charged a trip fee, right? I own a lot of properties and many of the properties that I own are in that high B to A range, and I just really don't see maintenance on those properties. It seems like the tenants take pretty good care of the homes. I do a very good job of making sure that the properties go through a very professional and durable and quality renovation before I place tenants in the properties. And even when it comes time to turn the property, I make sure that all the little things that could break on you are replaced or they're, repaired or refurbished. So we don't have issues with little property management or little maintenance requests during the tenant occupancy period. And so when you're interviewing a property management company, I like to ask a few different questions. And one of them is, how many homes do you manage? And I also want to then dissect it a little bit further. How many homes do your property managers manage? I found in my career that, 200 to 250 assets, if they're that high B to A quality asset, is probably a good benchmark for one property manager. If one property manager is managing any more than 2 to 250 doors themselves, I feel like you're going to run the risk for poor communication, poor service. When you start to get above 250 homes, it doesn't matter how nice the assets are. It's a lot of tenants to deal with. That's a lot of properties to check on. And so I can see some things falling through the cracks at that point. Another thing that you're going to want to ask is the infrastructure that they have in place. Like I said, it's good to see different departments in place for different things: leasing, maintenance, utility turn-ons and shut-offs, like I said, and then you got your property managers as well, but marketing. So who's marketing properties, things of that nature, to make sure that they get rented quickly and efficiently. So there's a lot of things that you're going to want to pay attention to, but I think infrastructure is a big part of this whole thing. Insurance as well, property insurance. Usually good property management companies will have a department for property insurance, customer service. So when landlords are calling in asking about properties, it's not just your property manager who could be in the field at the time, right? Not able to get on the phone and discuss any billing issues or something that you may have, or questions about your statement. So it's good to have some sort of customer service involved that can field calls from owners and tenants alike. And then you're going to want to ask, what type of properties do they manage? I know property management companies out there, they don't really manage A, B, and C class assets. Most, large professional property management companies have a rent cutoff. They won't manage anything below $1,000 a month rent because they know they're starting to get into a little bit more troublesome areas and they're dealing with a little bit more troublesome tenants. So I would definitely ask that, and I'd be wary of the company that says, oh, we manage it all. We manage multifamily, we manage single family, we manage A class, we manage C class. No, I don't think that that's a good option to go with. I think that they're trying to do too much. It's the old term, jack of all trades, master of none. The best property management companies that I've worked specialize in a certain class of property or a certain type of property, mainly just single family homes, and mainly homes that, let's say, rent for $1,000 or above, or $1,200 or above, and they stick with that. You see, like, Airbnbs are becoming more and more popular, and not every management company is going to be set up for a short-term rental. Like I said, if a company's saying they can manage everything, hey, can you manage my Airbnb? Are they even set up to manage Airbnbs? I don't know. That's something that you're going to want to ask them, though. And that's why I'm just very, very careful about, when I ask these simple questions, what do you specialize in? What type of asset class do you specialize in? Are you a multifamily property management company, or are you a single family management company? What is your rent cutoff? Those are all common questions that you should ask. I would ask for a description of the average property that they manage as well. Just give them have them give you a breakdown of and then match it up to what you own. And if that's very similar, then that should check that box that this might be the right company to work with. And then another thing that I always want to ask is, does your property management company, do you run on some sort of online system? Propertyware is a very common one, Appfolio. You want to make sure that they have an online system. I've seen, it's crazy, it's the 21st century, but I've seen property management companies that are still operating on paper. Everything, they're still using files and paperwork on these properties, when now there's software in place that can really easily track each property. And it also has a portal for owners to sign up on and track the status of their property, and then also a portal for tenants to go to and make maintenance requests and make it easy on them to pay rents. You definitely want to make paying rent as easy as possible on your tenants. You don't want to have your tenants go out of their way to go to the property management office to drop off a check. You want to make it very simple, something where they can just log online and put in their information and hit submit and pay their rent easily, quickly, and efficiently. So that's definitely another thing that you want to look at with your property management company. What online system are you running on? And so I got to go back to the importance of property management. It's just so important. I've seen the best quality properties in the best markets that should easily be able to stay occupied and, occupied with good tenants just end up running the wrong way, right? Running put in a negative down, a negative way. And it's really solely because of the property management company. Has nothing to do with the property, has nothing to do with the market, has nothing to do with the area, it has nothing to do with the quality of the renovation that the turnkey provider or the owner put into the property. It's just poorly managed. And so when we get back, we're going to talk a little bit more about the importance of property management, the ways to vet out a good property management company. And then we're going to have Scotty Mitchell join us to talk a little bit more about his experience managing properties, his experience managing homes in the DFW area and other markets across America. So there's a lot of good information coming up, so stay tuned.
Did you know there are 6 different ways real estate pays investors? Are you interested in getting started with real estate investing but just don't know how? Investing in real estate can be challenging, especially if you don't have the time, experience, or resources to do so. At American Real Estate Investments, they do all the hard work for you. They're a DFW-based company that buys homes in great neighborhoods, professionally renovates them, and places business professional tenants in your property. With their program, you can start earning headache-free passive income and equity growth from appreciating values in the fast-growing DFW market. There is no better place in America to invest in real estate today. To learn more about how their investors are earning up to 100% returns or greater with their program, give them a call at 888-323-AREI or visit their website at areiusa.com. That's 888-323-AREI or areiusa.com.
And welcome back to the Real Estate Cowboys radio show. I am here with a special guest. We're talking about property management today, and I have the CEO of American Real PM, American Real Estate Investments, in-house property management solution, Scotty Mitchell. He has been in real estate for over 15 years. He started his career in New York City, where he worked for almost a decade as an agent and an associate broker, and a director of operations for multiple firms. He moved to Texas for a better life for his family, where he shifted gears into property management, quickly finding his stride. The experience of working with one of the largest single-family property management companies for 5 years was the perfect springboard to opening American Real PM. With Scotty's expertise and determination, American Real PM has more than doubled in size each year for the last 2 years and has unlimited potential for the future. Well, ladies and gentlemen, welcome Scotty Mitchell. Scotty, thanks for being on.
Hey, it's good to be with you, John.
Okay, so Scotty, I wanted to have you on the show. So today is all about property management and the importance of property management for a passive experience. When you buy, renovate, manage single family homes, it can really turn into a job. And so our investors that come to us for the turnkey experience, we as the turnkey provider or any other turnkey provider in the nation, they're going to acquire the property. Hopefully they're going to make sure that they're finding properties in good neighborhoods to set their investors up for success. They're going to do quality renovations, durable renovations, make sure that there's enough useful life left on, big fixed items like roofs and HVACs, things of that nature, and basically set the property up for a passive experience from that side of things. Now, when you're a landlord, you have one of two options at this point. You can either manage the home yourself, or you can hire a property manager to do it for you. Since this is a passive income real estate show, we really like to recommend that you hire a property manager, because if you don't have a property manager, it can really become a job managing your properties and dealing with your tenants. So why don't you kind of explain to the audience the importance of a property management company, a good property management company, for that passive experience that these investors are looking for?
Of course, John. And it's not just having a passive experience as far as hiring a good property manager. I've actually taken on properties that were managed by a previous management company, and it was managed incredibly poorly, and the asset was on the verge of failing. So it's not just about passive or active ownership or landlording. It's also about making sure that your asset is in a good place to succeed and become a beneficial part of your portfolio. But as far as making it passive, what most people don't probably think about when they're looking at this, because coming through American Real Estate Investments, they're looking for it as an investment, as an asset to go into their portfolio. But property management is a living asset. It's something where there are real people, there is real property. It's not like a stock where you're buying into a company and someone else is running that company. So with that in mind, the property manager is kind of like the people that are running that company for you. People that have the industry knowledge to make sure that you're up to the local codes and the local regulations. People that are making sure that your leasing is going well, you're getting the right people in the property to take care of your asset, keeping those people in, doing the renewals, handling the maintenance as it's coming through, making sure that the maintenance is not tenant neglect, making sure that the maintenance is priced right and is done by professionals that are reputable and are not going to rip off the investor. Making sure that your HOA is in good standing, you're in good standing with the city and not getting violations, handling emergencies. No landlord really wants to wake up at 2 a.m. to handle a toilet that's overflowing, and that's part of having a property manager. You don't have to do that. As well, when things go wrong, let's say a tenant stops paying timely, it's the property manager's job to handle those collections, get the tenant back on track, evict them if needed, and each municipality is different as far as how the evictions go, and how long that takes and what's required in doing that. And as a landlord, that can be a bit daunting as well. So as a good property manager, you want to have a very well-educated staff in handling those things and great policies in being prepared for those things in advance. And as far as making it passive, if those policies are in place, that staff is well-educated, and that manager is doing their job well, the landlord can sit back and know that their asset is in good hands, and it can become an asset in their portfolio rather than something that has to actively be managed by them.
Right, yeah, that all makes sense. And so earlier I was talking about, you as the investor or you as an investor, let's say you're actively finding properties and actively renovating properties and then maybe handing it off to a property management company, or you're looking to use a turnkey provider to produce a single family rental for you. I talked about, you could buy the best property in the best neighborhood. You could do the best, most durable renovation to keep your capital expenditures low throughout ownership. But if you have a poor management company looking after your asset, things can really start to fall apart very quickly. What would you say about that?
Yeah, things can fall apart way faster than people would expect. If you put a bad tenant in there, for example, a tenant can do incredibly bad things to a property. And if you don't have a manager that has a policy, for instance, of going out every 6 months or so and making sure that your property is taken care of or has relationships with their vendors so that when management or maintenance items come through, that those vendors, if they see something that's amiss, that they're going to report it back. A lot of damage can go through and happen to a property. I've seen turns from properties I had just taken over that were in thousands and thousands of dollars because of a tenant really destroying the property. On top of that, if for instance, an HVAC isn't taken care of and a filter isn't changed on a regular basis, and our recommendation is at least every couple months. We try to tell the tenant to do it every month, and that's something that we pay attention to if there's any kind of maintenance item. But if a filter's not regularly changed, it's going to restrict the airflow to an HVAC system. It's also going to put dust on the coil, which creates more condensation. That condensation then goes down into the drip pan. The drip pan then goes into the drain. The drain clogs because of that dust, and then you've got water that's usually coming from either a closet or the attic, and that water has to go somewhere. It's going to go into the property. It's going to create damage. At that point, you've already got a problem. But if your property manager doesn't know exactly what they're doing or isn't really on the ball and on top of things, they're not going to know that the two most important things are that you, have to stop the bleeding, get the water to stop, and then get the water out. Because especially, say, in the Texas market where it gets really warm, it's 3 to 5 days till you have organic growth. Once you have organic growth, that's a much bigger problem. So, again, you have to have the educated staff to know exactly what to do at that time, and the policies in place in advance, prepared for whatever situation comes up to keep those disasters at a minimum.
Yeah, that makes sense as well. So I'm gonna turn the tables. Since you're you're a property manager, you run a property management company. We have a lot of listeners that are maybe new to investing or just thinking about buying their first property. What recommendations would you give to them? Like, let's flip the tables. You're interviewing a property manager to manage your investment portfolio or your first property. What kind of things are you looking for in a good property manager?
Yeah, that's a great question, John. First couple of things that pop into my head that are questions that when they're asked to me, I know that someone's coming from an educated perspective and is going to get the right kind of big picture of what I'm going to do, is what is our communication style? What is our communication policy? That's one of the biggest ones, because with lack of communication, that says two things. One, that a property manager is likely to be doing the exact same thing to the tenants, which is going to cause more and more problems. And B, it's going to say that they have a policy of being transparent and open, and giving you the information you need to be able to run that asset properly and get the information they need to run that asset properly, rather than ignoring problems and letting them exacerbate. A couple more things that come up would be their fee structure. Obviously, you want to know exactly what their fee structure is and how the property manager gets paid. More importantly to me, and this is something that a lot of people don't think about, is how is that fee structure incentivizing my property manager to act on my behalf? For instance, there are companies out there, they have lease guarantees. I refuse to do a lease guarantee where if I put someone in the property, I guarantee that they're going to be in the property for 12 months or there's some kind of penalty to my company. That's not to say that I'm not going to take care of an owner. If I put someone in and I have to evict them 3 months later, of course I'm going to take care of my owner. But having that lease guarantee in there incentivizes my company to make sure that person stays in your property for 12 months, even if we find that they're not doing the best for your asset. And in my opinion, that incentivizes my company to not have your best interest at heart. So knowing what the fee structure is, how the property manager is getting paid, and what that incentivizes the property manager to do in your best interest is a very important thing that I would question if I was going to find a property manager. I would say one of the more important things that, again, that people don't really think about, that I would be concerned about, is what is your property manager to portfolio ratio and why. And the reason I say and why is because there's no real right answer there, depending on the company structure. If you're outsourcing if you're outsourcing evictions, if you're outsourcing your maintenance, so on and so forth, you can have a property manager that takes on many more properties than a property manager that's doing all the evictions in-house themselves, that's keeping their eye on all of the maintenance that's coming through for a portfolio. At that point, you're looking at, a property manager that might only be able to handle 150 to 200 homes, where that same property manager put into a situation where all of that stuff is being outsourced, they may be able to handle 400, 450 homes. So it just completely depends, but knowing what that ratio is and why is going to tell you a lot about that company and how it's set up.
Yeah, I talked about that earlier, and I pretty much alluded to, 200 to 250 properties per manager is probably a solid number. But like you said, if they're outsourcing a lot of stuff, it could give them the opportunity to manage more professionally. In my career, with me, I started off in Detroit and dealing with the C and D class asset. And I don't think that one person can manage 200 to 250 C-class assets. They're just a lot more troublesome. The tenants, it seems like you're always chasing them down for rent. Maintenance problems seem to be a little bit more prevalent with that type of property. So I guess this is going to lead into my next question. So we like to talk about passive income, passive experiences. And my personal investment philosophy is I like to buy a high B to an A type investment, which means I like to really stay very close to whatever the median value is in whichever market I'm investing in. So let's use St. Louis as an example, because we produce properties up there and manage properties up there as well. The median home value up in St. Louis is just below $200,000. So I don't like to deviate too far below that $200,000 mark. Like, let's say if I got below $100,000 on a property, I feel like that's putting you in a position where you're in a neighborhood that's just, you're going to deal with more crime, break-ins are more common, the type of tenants that you're going to attract, they don't have the best jobs, the most consistent income, they're not really working salary positions, things of that nature. So I guess give me a look at what type of management company you are. What type of assets do you go after and do you manage? And which ones do you like to avoid and why?
Sure, John. The company that I've built is built around managing A and B houses, A and B class houses. We do have in our portfolio some C class. I would say I wouldn't take on any D class, and I try to avoid taking on C class as well. In my opinion, which goes along with what you've just said, it's a different management style that you have to use for the C and D class properties than what you use for the A and B class properties. And that different style is to try to avoid some of the common complications that are going to come up, as you mentioned a few of them, when you're dealing with C and D class properties. You're in neighborhoods that may have a little bit more crime, that may have a little bit more job turnover, that may have a little bit more of the element of people leaving the property without informing you that they left the property, which causes its own situations for different reasons that I've come in contact with those properties, different reasons that they would do that, but I definitely see that. It's also in those types of neighborhoods, there are owners that I've managed properties like that where I have to recommend things like putting extra reinforcements on the door, that I have to talk to them about potentially putting in either fake cameras or real cameras to protect their asset. And it's just a different beast. I also agree with you that almost not dependent on structure of company, you're going to have less houses per staff member, which is going to raise your cost as a property manager, which is, that has to get passed somewhere, obviously. But you're going to have more staff per property to be able to manage the C and D class properties because there is more actual labor involved in taking on those properties. So with that being said, the company that I'm building is more geared towards A and B class properties. That's definitely what we go after, and a majority of what we manage. As I said, we do have some C class properties. I know how to manage those. I've got experience managing those. And I could build a great company to manage those, but that's not the company I'm building.
Yeah, no, that's great. So we're going to take a quick break here. But when we come back, I'm going to kind of elaborate on what you just said. Because I've owned C-class properties, I own Bs, I own As, and I can give my first-hand experience on what I've seen with those different properties. And then when we come back, we're going to talk a little bit about property management horror stories as well. So stay tuned.
Looking to complete a 1031 tax-deferred exchange and are needing financing for your replacement properties? Let Graham Parham at Highlands Residential Mortgage guide you through the process and make your 1031 exchange go smoothly and on time. As a seasoned investor, Graham owns several investment properties himself, and he can share with you the best way to plan your exchange. Graduate into a better property or properties and make use of leverage to obtain better cash flow and higher returns on investment. Highlands Residential Mortgage has one of the best in-house loan processes to deliver your loan on time and without any surprises. We are 1031 exchange friendly. Call Graham's toll-free direct number today at 855-326-6802 for your free mortgage consultation, or visit us online at texasinvestorloans.com. Highlands is an equal opportunity lender, NMLS 195724, located 1201 North Central Expressway, Dallas, Texas 75234. Highlands Residential Mortgage, NMLS 134871, is not a financial advisor.
Okay, welcome back to the Real Estate Cowboys. John Larson here, your host. I'm with Scotty Mitchell, CEO of American Real PM, a professional management company headquartered in Dallas, Fort Worth, and manages homes now in 4 major markets across America: DFW, Houston, St. Louis, Missouri, and Kansas City, Missouri. So, Scotty, welcome back. I'm going to talk a little bit about, we were kind of talking about different classes of property and how C-class homes can be a lot more labor intensive, and I've definitely seen that in my career. as being a real estate investor, both actively and passively. And I got my start in Detroit, Michigan. And, I started off producing C assets for myself and started producing C assets for my investors. And I will tell you, it was very, very difficult for me to find a good property management solution for those type of properties. And I do believe it's just because of the fact that it's very labor intensive. So for example, you talked about a property, someone just leaving in the middle of the night, right? So I couldn't tell you how many instances where there was someone that stopped paying rent. We start threatening eviction, putting notices on their door. They know they're going to get evicted from the property. So they just decide one night they're just going to leave, right? They're not going to go through the eviction process. Well, the problem with that, when you have a C-class asset in a neighborhood that's got a lot more crime, there's people out there that are looking for vacant properties, right? So they can go in, they can steal things out of the property, or they can go in there and squat in the home, right? And then you find yourself where you're trying to evict a squatter out of your property. So that was one thing that I really had trouble with. And, comparing it to an A-class property, you have a tenant that moves out, and it's not very common that an A-class property, a tenant that's going to be living in an A-class property is just going to leave on you in the middle of the night. Now, I'm not saying it wouldn't happen, but the chance that it happens is far less than dealing with some of these C-class homes and more of these like troublesome neighborhoods and troublesome properties. And so, we don't really, I've noticed I don't run into issues like that with my A-class homes. The tenants seem to be a lot more responsible. They pay rent on time. If they do vacate the property, they get proper notice to vacate. It's very, very rare that you have to do an eviction, with an A-class tenant. And so give me a couple. You managed a lot of homes in your career. I just gave you a couple horror stories, I would say myself, which is, tenants leaving in the middle of the night, leaving my property open to just, get broken into and things like that. Do you have any other stories that you'd like to share with the audience that maybe occurred when you started managing properties that were maybe more troublesome or not in the best type of neighborhoods?
I do have a couple that pop out of my head really quickly when you talk about that. One of them relates exactly to what you just said. We had a property go vacant, and it wasn't vacant for, like, that tenant actually left properly. They didn't just skip out, and it wasn't vacant for very long. We're talking maybe 3 weeks. And we did a renovation of what needed to be done for the turn, got it ready to roll. And literally the new tenant was scheduled to move in on Monday. I was going the Friday before that to do my move-in inspection, take some pictures, get some evidence of condition of property before they moved in, make sure all the work was completed properly. I had a couple more days to get anything done if I noticed anything that hadn't been done. And when I opened the door, I just heard water spewing. Of course, immediately went to my car. I've got a key to turn off the water at the street. Turned the water off, went back in the house to assess exactly what the problem was. Opened the door, walked in, and there was attic insulation all in the living room, at which point I knew this wasn't just I had a leak. As I investigated further, I found that someone had broken in through the kitchen window in the back of the house, had come in, ripped up the sheetrock of the walls to get to the copper that was going from the condenser to the coil in the attic. So there was holes in the wall going up the wall from where the condenser was, holes in the ceiling going across to where the AC coil was. The AC coil was gone, so the air handler in the attic was completely destroyed. And then these geniuses that had done this and broken into this house decided that it looked like the refrigerator supply line was made out of copper. So they kicked a hole in the wall right there and went to cut that copper out of the fridge supply line. Now, they didn't turn the water off. So as soon as they crimped that supply line, a very high pressure water burst, went through 2 walls and started flooding the house. I really feel like I missed them by maybe a couple of hours, because there was, otherwise there would have been water running out to the street, and there wasn't. It was all contained within the house. But a lot of damage done by this, obviously. So I immediately, I've got the water cut off. I called a water extraction team immediately to get the water out of the house. Again, organic growth is a big problem. I called an HVAC vendor to come and give me a bid on exactly what they did to the HVAC and get that fixed. I called a contractor to come and get a bid on the damage to the property as far as the sheetrock, and I believe we needed new carpet in that scenario. Don't believe I had to replace the cabinetry there, but I wanted that bid as well. And then I called the cops so the cops could come because there was, obviously a criminal burglary there. All of that I did before I called my owner. Right, so that when I called my owner, I said, hey, the cops are on the way, my HVAC vendor's on the way, a rebuild vendor's on the way, the water is shut off so the damage is done, and water extraction will be started this evening. Right?
Yep.
After I called my owner, I called the tenant, pushed them back, actually got them a deal on a storage unit, saved the tenant for the owner who had to wait another 3 weeks now because there was a lot of damage that had to be fixed. Had to go through an insurance claim, which means an adjuster had to be involved. I believe, all in all, end of story, I think it was $10,000 worth of damage they did.
Wow.
For like $200 worth of carpet.
Wow. Yeah, and so, not to say that this doesn't happen in, more middle class, upper middle class neighborhoods. It can happen anywhere. It's just the chance that it happens is far less, which is why I really I prefer to buy properties in more of those middle class neighborhoods where crime just is not it's not as common. And so same thing goes with my investors who come from California or New York or New Jersey or Phoenix or wherever it may be. They all are kind of looking at the Dallas market and the Houston market or Texas as a whole because the economy is so good here. There's people moving here daily. Almost 150,000 people moved to Dallas last year. That led the nation. And population growth. And so I just recommend to them, look, if you want to go buy that C-class asset because a spreadsheet shows you you're going to get a higher rate return, you can go do that, but just understand issues like this are going to be more common. So is $100 or $200 extra a month on your net cash flow worth a $10,000 repair like this? Probably not. And when you start buying properties in these neighborhoods that aren't, they're not in demand from retail homeowners, retail home buyers. So, the properties don't really appreciate in value because what causes values to increase generally, it's because of that owner, occupant, or retail buyer demand, because these people are willing to pay over market value to win a property, right? So that's where you see your rising prices, and that's why we see rising prices in a lot of these growing cities across America, like in Denver or Phoenix or Dallas, Austin, Houston, etc. And so, yeah, that's my thing. I'm not saying don't buy C-class investments or invest in C-class properties. I'm just saying, look, understand that it's probably not going to be very passive for you. That's all I'm saying. And so, going into the next question, I would say compare some of the markets that you have managed properties in. What is it that you like about, this is a Texas real estate show, so we like to focus on Dallas and Houston and Austin quite often. But talk about what your experience is in a Missouri market or any other markets where you own or manage properties in compared to what you see down here in Texas. I just talked about the population growth, so I'm sure vacancies aren't as high in a market like this. What would you say about when you talk about the different markets that you invest in? What do you like? What don't you like about some of the markets that you're in?
Yeah, of course. And I can't say that any of the markets I'm in I don't like, but they are definitely massively different. For instance, Texas, and I love Texas for this, is incredibly landlord friendly from a legal standpoint and from a property code standpoint. One of the ways that this presents itself for investors that is incredibly beneficial is that, for instance, if I'm comparing the Dallas eviction systems to the St. Louis eviction systems, in Dallas, it's very, very straightforward that on the third day of the month, I can send a notice to vacate, a 1 to 3 day notice to vacate. We send it via U.S. mail. We can file on the 10th then, right? We've got to give it time to get there in the mail. So we file on the 10th. There's a 2-week period between filing and court. So we get a court date somewhere around the 25th. We get our judgment. If they haven't paid rent, 98 to 99% of the time, I'm getting a judgment for default on them. At that point, they have 5 days to appeal, and then I can file a rate and get them out. So we're talking about right around a month, and we're done. We're out. The non-paying tenant is out. I can turn it and get a new tenant in. Now let's take that over to St. Louis. which is much more tenant friendly. And you've got, yes, I send a demand for rent somewhere around the 3rd. Yes, I can file on the 10th. Then I will get my first court date around 2 weeks out. So we're talking about, again, around the 25th or so. But that's a first court date. And it's never, if the tenant shows up, the only court date. If the tenant doesn't show up, great, I can get my default judgment. And then they have a 10-day appeal period, and we're around a similar time frame. But if the tenant shows up and they say, no, I want to go to court for this, now we have to get a second court date, which is now another 2 weeks out. They can then extend that court date, and we're now looking at a 6 to 7 week eviction process for a straightforward, they didn't pay their rent eviction, right? So you're looking at 3 weeks of non-collection, simply because of the way the municipalities are set up and the statutes and laws are set up within that region. Now, when I get a property in Texas and we've evicted and the tenant is out and I've got my turn, if I can find someone and get the turn done in 10 days, great, it's done. 10 days later, we got a new tenant, we're rocking and rolling. In St. Louis, again, St. Louis County, they have registrations that are incredibly strict, I would say. And there are some cities around Dallas that have registrations, but usually those are like next day, I can get an inspection, it's health and safety, bing, bang, boom, we're done. With St. Louis County, those registrations usually take somewhere around 2 weeks. So again, now versus 10 days if there's no registration in Dallas to get that turn. If I have a registration, it's one of the cities around Dallas that has a registration, add 2 to 3 days to that, maybe 4. So you're looking at 2 weeks. Versus, so now we're at a month for the eviction and then 2 weeks. So you're at 6 weeks. In St. Louis County in Missouri, you're looking at a possibility of 6 to 7 weeks for the eviction and then 2 to 3 more weeks for that inspection registration getting done. So in a worst case scenario in St. Louis, you're looking at an 8 to 10 week period from they haven't paid to we've got a new tenant in, right? While in Dallas, you're looking at a 5 to 6 week. That's a pretty big difference. And it very much has to do with the way that the statutes, the state statutes and local municipalities handle themselves and behave. So there are very major differences. One of the things I love about Texas is that Texas, from a local level all the way up to the state level, is incredibly landlord friendly.
Yeah, makes sense. One more reason to love Texas and Texas real estate. Well, thanks a lot for being on the show, Scotty. We kind of ran over on this one. We're going to probably have to have you back again because I believe property management is such a crucial role in this passive income experience that you can receive through owning rental properties and building a rental portfolio. So, Scotty, thanks for joining us today.
Absolutely. You got it, John. I'll come back anytime.
Sounds good. We just had Scotty Mitchell, a property manager, a CEO of a property management company, American Real PM, that is American Real Estate Investment's sister company. And so Scotty provided some great information on how to professionally manage properties. And I will tell you what, I trust him managing my homes, and I would trust him to manage any of your homes that are listening as well. He's a very, very vital part to the whole passive income experience here at American Real Estate Investments. So if you like what you heard today, if you think that, hey, single-family rentals is a great option for me to start earning passive income, I want to get my money to work in real estate, go to realestatecowboysdfw.com, enter your information, start receiving weekly updates on exclusive investment opportunities in the Texas market. We mentioned Missouri as well. Also private lending opportunities where we give you the opportunity to be the bank on loaning on a single family land development here in Texas or something like that. And also vacation rentals down in Belize, private islands, luxury homes. We have a lot of different passive income real estate options. Just go to realestatecowboysdfw.com, put your information in, register to start receiving that weekly newsletter. We also have a really cool quiz on there called the Investor Quiz. It's about 10 questions. Answer those questions to see what type of investor you are. Maybe you are more geared towards private lending. Maybe you're geared more towards single family rentals. Maybe vacation rentals. Maybe a little bit of all of them. Go on that quiz at realestatecowboysdfw.com and answer those 10 questions and find out. And once again, thank you for joining me on this week's episode of Real Estate Cowboys Radio. This is John Larson, and remember, everybody listening today, what is your return on life? Real estate can give you a great passive income lifestyle, and it can give you the chance to build wealth through these awesome passive income real estate investments. So once again, thanks for listening to the show. We'll see you next week.
All opinions expressed by the hosts of the show are the opinions of American Real Estate Investments, LLC, and do not reflect the opinions of guests or sponsors. No personal or professional advice heard on this program should be considered an endorsement to follow a real estate financing or investment strategy. Before acting on any information, seek advice from your financial, tax, mortgage, or real estate advisor, as the information is not guaranteed and investment strategies have the potential for profit or loss.